Hello everybody, hope everybody is good. So today we wanted to discuss regarding the cash flow statement at the simple level for the businesses run by small industries or the small firms. So here I am to give a small presentation regarding it. Hope you will be understanding. So if you have any doubts, you can just let me know. And regarding this, so we'll start the cash flow statement. So basically, if you look at the cash flow statement, so let us try and understand the meaning of the cash flow, not exactly, but the basic meaning of the cash flow. So we can see here the cash flow statement is the financial statement that provides the data for cash inflow and cash outflow of the businesses in a particular financial year. We can prepare a financial year the cash flows, and even we can do the month wise, even we can do the budgeting of the cash flow for the future months also. So here in this slide I have prepared a cash flow, given an example for the month of the, like we can say, for the next coming month. So in simple words we can say that we have to make a statement like budgeting or planning the total income and the expenses for the future months. So here I have taken example like cash flow budgeting for a month. You can say from 1st of July to 31st of July. Here I made a simple format, a simple Excel format. So here you can see the first starting what we have to do is we have to make sure that whatever the funds as on date like available in the bank, so we have to mention that amount. Like if you may be having the multiple banks, like here we are mentioning two banks. So bank 1 where the amount is of 5 lakh rupees, and the bank 2 where the amount is of 2 lakh rupees. So even if you have any cash, so cash reserves also, that also you can put it in that. So total funds available. So in the bracket I have mentioned it as A. So total funds available in the outer column, it is totally 7 lakh rupees. So total we are having 7 lakhs of funds. So now what we are going to do is we are going to plan the expenses. So we have to deduct the expenses, like some of the businesses might be having the bank EMIs. So bank EMI where for example I have mentioned as 5 lakhs. Then you might be having salaries that is of 10 lakhs. So electricity bill, so that may be 50,000. And I have mentioned the statutory payments. So statutory payments might be including whatever the, like TDS will be there, ESI, PF, PT will be there, GST. So put together I have all mentioned it as 5 lakhs. After that, of course, we'll be having some suppliers to whom we have to make the payments. So as per list I have actually mentioned here, so we can plan the supplier payments as per the list. We have to prepare list of the outstanding of the suppliers, and according to we have to plan. So somewhere I have taken some 15 lakh rupees, and there may be some ad hoc payments which are surprisingly will be getting in the month. Like if you want to make a payments against upfront, you can say the ad hoc payments where so I have planned over it is 2,50,000. So total expenses in the column where you have mentioned, so in the bracket I have mentioned it as B. So total this will be of 38 lakhs. So now collections from the debtors. So whatever the sale we have made, we have to get collections from the debtors. So I have mentioned it as C. So total will be of 45 lakh rupees. So now we have to calculate the surplus or the deficit. So to calculate the surplus or deficit, we have to take the of the total A, which is total funds available. So plus C in the sense what are the collections we are going to make for this month from 31st of July to 31st of July. That comes to 45 lakh rupees. So total A plus C minus the total expenses, which is 38 lakh rupees. So surplus or deficit, here we can see a surplus of amount of rupees 14 lakhs. So 14 lakh rupees will be end of the month. You are going to save some amount. In case if it is a reverse one, like if you get a deficit over here, then you have to plan accordingly your the above expenses. Whereas the fixed expenses like the bank EMIs, the salaries, the electricity, the statutory payment, where we cannot touch anything, we have to pay as it is. For the supplier payments, we can adjust, like we can pay according to the budget. So here if you have any deficit, then you can plan the supplier payments also. So even for planning the supplier payments also, there will be having the, we have to plan the creditor list, like the name of the suppliers will be there, so total amount will be there. So for ABC company you are going to pay some 25,000 rupees, for XYZ company you are going to pay 75,000. So if surplus is there funds, then not an issue, we can pay as per the credit agreed terms to with them. If you do not have any surplus fund, if you get a deficit, then you can plan XYZ company somewhere about 45 to 50,000 rupees, so that you can adjust your cash flow. So there should not be any deficit. So accordingly, you have to prepare the debtors list also, from whom you are going to like get the amount and all those things. And for example, if you are getting a deficit, you can discuss with the customer, you can plan and take some advance amount to them. So like that way you can plan your cash flow, and that will be a simpler format. So for the existing like small firms, they can plan like this, and they can project the actual situation at the end of the month, and they can go ahead with their regular point of business. Thank you.